Good morning, traders from the Chicago Board of Trade building here in the financial district of Chicago, downtown Chicago. Thanks for joining me for episode number 2158. It is Wednesday, the 26th of January, 2022. FOMC day today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, this morning, how you all doing this morning? How's trading been for you? It's been a very, very busy week, and hopefully you're keeping it together and making some money. Um, Key element here: risk on sentiment following Microsoft's announcement. Microsoft came out yesterday. The market sold off. It beat its earnings estimates slightly. Made comments about the Azure service that caused about a 10 or 11 point swing, or 11% swing up from down. The pre-market heat map looks pretty solidly strong this morning, coming into the FOMC. Um, earnings mostly in line, and today the earnings spree continues. Pre-market, we had AT&T, Anthem, Boeing, Abbott, General Dynamics, and Freeport McMoran. And then after the market, we're looking for Intel, Tesla, and Seagate Technology. As far as releases, we did have this morning. We had goods trade balance came in slightly worse. Wholesale inventories came in slightly higher, 2.1% versus 1.1%. Retail inventories 3.6% versus the prior 1.2. We're looking for new home sales at 10 o'clock. The crude oil inventories from the EIA at 10:30, and then of course the Fed interest rate decision and the press conference this morning. So that's really what's important. Very, very important day. Of course, as I said on Monday's Trader Bite, very important week, not only for earnings but also for the FOMC decision today. I think the market's going to take some heavy cues into the remainder of Q1 of this year. The market seems to be quite bearish in terms of outlook on inflation and interest rates and the yield curve. So overall, it's a good time to tune in and see really what this all means. So let me get down to the yield curve. What have we done overnight? The S&P is opening up in a gap versus yesterday's RTH session. We're trading above 44.10. We're up 141 basis points. The NASDAQ up 211 basis points. If you recall, the NASDAQ's been really lagging along with the Russell in terms of the market so far this year. The Euro Stoxx 50 and the DAX are quite strong this morning. Crude popping above that 85.15 key level. It closed at 85.17 yesterday and is running for that high crude. As I said, I believe it was Monday or maybe last week. I don't know. I've said a lot. Crude's expected to push 90 and squeeze into $100 a barrel, and that's likely to be an additional drag on the economy. So we may see ourselves in the situation that we were in 2000 and when was it? I don't remember. Was it 2005? I don't remember, where the market was moving in a direct inverse correlation to the price of crude. When crude was at $140, $142, something like that. So as prices push up, these are not all-time highs for crude, but they are recent highs, and it's likely to cause a big drag on costs for everybody. Logistics specifically, FedEx, the transports, which is a major component. It's the lifeblood of consumption and manufacturing, so that's likely to cause a drag. So crude may come into play here. Excuse me. Of course, the other thing is the Ukraine and Russia, this conflict. The first test for the Biden administration from Russia. There's always a test. Um, it's this conflict may wind up being bigger than it is. In my opinion, this is another North Korea type of thing. You know, hey, give me attention. I need some attention or whatever on the world stage. Who knows? But keep an eye on that. Geopolitical risk is quite high currently with Russia going up against NATO and Europe. So, tough call. As far as, well, since I have it up, here's the chart I posted for Bitcoin back at the end of November, beginning of December, Thanksgiving or so. I was looking for a break of that, the red line, and then that became the immediate expected resistance. And you can see the market, the Bitcoin on Coinbase pulled back to it. Key support, very, very small bounce, and broke through into the expected support of the $33,000 region. And we hit that, we're bouncing. So very orderly trade, very orderly trade in Bitcoin. And now we want to see if it's able to get back up to 42,000 and hold. If it holds below 42,000 and starts to turn down, then 28,000 is the next target. And below 28,000, this thing has a free fall, is likely to go into free fall into 20,000. The most traded price now in this zone is around 11,000. The most traded price since the beginning is close to 10,000. So that's the major support there. But if it takes out this 28, there's likely to be a lot of pain. And this test of 42 is quite important. That covers the Bitcoin portion. As always, Ethereum is really taking a stronger bounce. Ethereum tends to fall relatively less than Bitcoin and move up more quickly than Bitcoin. So let's move to the S&P. The S&P 500, 352,000 contracts have traded. It's about twice what we would normally expect. The inventory is about 61% long, meaning 61% of the volume traded overnight traded above the settlement price. And the range is outstanding again, 114, 115 points so far in the session. So we're starting out quite volatile with the FOMC in front of us. So this is likely to be a very, very busy day. Point of control 44.13, and the key target above is 44.22.23, which is the overnight high currently. Which is the overnight high currently. So that's where we stand there. That's an overview of what has taken place. Just a quick look at what's going on here. Yeah, just a quick look at yesterday's plan. Yesterday's key plan was to push lower into 75, push up to the prior settlement, which was 44.06, 44.04, and fall back in. That's the primary scenario. Here's what actually happened yesterday. So that's the plan. And I can't fit it into one chart. Let me switch to a 6-tick Renko here. Let me shut this off for a second. All right. So this is a 6-tick Renko here, trying to get as much of yesterday's chart on the screen as possible. We open up sideways as expected, pushes down to 76.50 versus 75 expected, rotates back up, consolidates, pushes up to 40, whatever, 44, what was the high? 44.03 yesterday, 44.0275 versus the 44.04 expected before moving down. So not a very common thing, but the market yesterday traded exactly as expected. Some really decent trades yesterday. Just if you played support resistance, just traditional price action support resistance, and identify the risk on the way, really there are a lot of trades in here that can be had. Like for example, pulls back to the VWAP, breaks down, pushes through, and comes back to VWAP and the prior high right here, for example. Hindsight's always 2020. I can always go back and draw lines on a chart. That's what people who write textbooks do. But I'm seeing a lot of that. There's a box here, for example. Breaks through the box, comes back to VWAP mid before the continuation. Like these kinds of trades are just bread and butter. Bread and butter for me because I can identify risk very clearly. I can identify risk on this trade very clearly. I know what I'm leaning against. I'm leaning against the box here, right here. So I know that there's a volume distribution that looks like this, and I know that once it passes the point of control of that box, it's time to bail. It shouldn't move that far. The problem is volatility is pretty high, so the risk taking the pullback on support means 6.5 point stop is the minimum needed to be able to hold that trade through. But we see there's just a lot of these in here. You can see it right there. There's just a lot of these kind of setups that exist in this kind of environment. And that's what I love about volatility, is because the action, the price action, the order flow, and the auction become much more fluid. But having seen this, even though hindsight's 2020, and I can go on and show all these examples of perfectly created trades, the thing with this is the more you see it, the more confident you become, the more you're likely to trust these trades as they happen. And you can get these on smaller time frames or bigger time frames. This high here against the full session mid from below, full session mid acting as resistance, pulls back, breaks the full session mid right here, breaks through, comes back to where? Exactly the same price. This price is the same as this price right here. Unfortunately, it occurred on the close, but you get the point. This is, there's no need to complicate the trade. You can keep it very simple. I love to use volume profiling just because I like to see what's happening inside of price at every price. Yes, price is king, but volume tells me how important that price is, or how irrelevant that price is. So that's where the volume profile is, and it's something that I can say that I pioneered and brought to the forefront back in from 2005 through my time on Twitter and so on and so forth. So this is why I advocate for volume profilings, because I can see where prices were accepted. I can see whether balance was found. I can see whether there's an excess where the market has rejected prices. There would be no volume there. That sort of stuff comes and plays, and the market does have memory. I know there are a lot of videos and people who advocate for the fact that technical analysis is garbage. It's just guessing by looking at the past. But I guess those people have a wonderful a wonderfully accurate randomizer, because the argument that that prices are very random. I agree with that. There's a huge random element to the market, but the market also has a lot of memory, and that's where technical analysis comes in. And there are many, many ways to skin this cat to make money off of it. Let's take a look at the overall picture. Let me switch this chart here to a 30-minute just to get a bigger overview. Yes, I am drawing, and you should be able to see that I'm drawing, unless something's wrong here. You should be able to see the lines that I'm drawing. Okay, so what have we done? We opened on Monday. We balanced down here. And then we broke higher on Monday. So we had a neutral extreme up day. We tested down. We found buyers. We turned around. We finished strong. Then we sold off and created what ultimately became this balanced profile in the overnight session. On yesterday, and we came in yesterday with the idea, and I highly recommend you watch. It's a little bit long yesterday, but I highly recommend that you watch to understand the logic that led us into that plan for the 75 to 404 and the expectation that it's likely to be choppy on the open. This is really important stuff. I know it's not as great as, me showing you my DOM and clicking away and scalping and all that, but that, been doing this a long time, 22 years now. That's nonsense. That's like the trick. You go to a restaurant and they have this whole show for you, but the food is garbage. The food is terrible. It's not nutritious. That's what I see. I see like a lot of pomp and fanciness, but there's no substance. There's no real macronutrients in that meal. And this is the macronutrient of trading, understanding what the auction is doing and understanding how it's progressing. And what we did yesterday was we balanced out, we tested down, we found buyers again, just like the day before. We tested up and we finished in the middle, completely balanced. We had an inside day yesterday, which is expected coming into FOMC. And I talked yesterday about, if you're a big fund manager or somebody who's allocating for a pension of billions of dollars, why would you take a position before the FOMC? Why would you put risk on? The only thing you might do is put on some hedges in the futures or options or something. Options have a high premium right now, so the insurance there is expensive. But, could be selling options to hedge as well. So there's no big reason to put on these big positions. And so yesterday was expected to be an inside day that checks both sides. That was the green line of scenario one, which brings us into today. And today is a multi-distribution profile. We traded quite a bit in the lower session here. Let me expand this. It's kind of crunched, and you may not be able to see through the noise here. You can see that down here, the Asian session was pretty much sideways. Europeans come in very bullish, and they move the distribution to the upside, and we are opening at the high of yesterday's range. We were almost opening out of range, so there's an imbalance the market's bringing in. The market's bringing in an imbalance into the 44, 23. I mentioned this in the Head Trader channel yesterday as a big target, an immediate big target above us. And if you want to take note, the price map going up, and I posted, if you're a Convergent member, you can go to the Head Trader channel and look at, I think it was 6 a.m. this morning. I put up the map for the price map of what's coming, what are the key areas above, and I talked about higher time frame key prices. 44, 15, 16 is 200 SMA. 22.23, which we hit in the overnight session. The high is 23.25. Pretty precise action here in the S&P. That's an MC point of control. You can see it's a very prominent volume point of control. Below us, we have a very prominent point of control right down here in the 43 region. But above us, we have 44, 22, 23, 44, 50 is the mid-century figure. And then we jump to 45.20, 45.60 is the 100 SMA. 45.20 is a swing low from December 20th. Then we go to 45.72.75, which is a swing low from the 10th of this month. Then we move into 46.83 as the big accepted, most accepted price above at 46.83. And then from there, it's the all-time high. Below 42.05.06, 41.85, and then we drop into 41.56 and so on and so forth. So those are the big areas above and below. And so far, we rejected these lower prices and are starting to move up. I do believe there's a lot of overhang above us. I do believe that the rallies are likely to be refuted. If you look carefully, and I'm going to show the full session profile only. If you look carefully up here, you'll see, look at this. Boom. 2-day balance that is overlaid with a 3rd day of balance. This is the 17th, 18th, 19th. This area here becomes our next key target. So 45.70, 45.85. I mentioned I mentioned this as you know, the 45.50, the 45.60 is 100. The 100-day SMA. This is really formidable resistance right here in this 45.60 to 45.85 area. This area here is likely to see us pull back and come and cross back over, and just watch how see how value is reversing and it's pushing higher. We'll see what the day does today with the FOMC, but you can see the turn and the curve back above. Let's get to it. We have the markets opening here shortly. I am talking a lot these days because there's a lot to cover. I've kind of made this chart a little more obscure with my boxes, but so FOMC day. Am I going to sit here and tell you what the market's going to do on FOMC day? Not a chance. I have no idea what it's going to do, but I do know that before that FOMC release comes through, the expectation is we are trading up here at 44.04, which is yesterday's high. The expectation is we dip into yesterday's range. We pull right back into this 43.70 area, full session mid, consolidate here, and then move back up. And then we have FOMC, which anybody's guess, they could be even more hawkish, which I can't imagine, or they may be dovish. And if they are dovish, then we start to work ourselves back into that 44.85 area right here. 44.85, which isn't too far, consolidate, and they may start to push through all the way into the 45.30. So the 30 up higher before falling off into the close. The secondary scenario, remember, after the first couple hours of trading, it really doesn't make sense to trade ahead of the FOMC. Keep your powder dry, save your bullets, save your risk for after the FOMC, not at the FOMC. Don't try to trade the number. Wait for the movement after. The movement after is likely to have some purity. Leaning against, and I don't like how far I'm zoomed out, but the range has been very high, so I have to be leaning against this 25 area. Push up, then get an impulse down, brings us back into line with yesterday's auction, and then we start to challenge this low on FOMC and make our way down into that 4,200 handle, 41.85, and so on and so forth. So 41.85 is the key target below. This is on a very hawkish sentiment as we reopen. Expect the open to be relatively choppy, and expect that the positioning is going to be very whipsawy as the futures are used to hedge positions ahead of the FOMC. Again, sorry about another long one, but there's a lot to talk about here. I'd love to keep these to 15 minutes, but there's so much to cover because there's a lot of action. Good luck. Watch your risk. Make sure you're here tomorrow. Don't blow your account on one or two trades. Make sure your broker setting limits, risk limits, auto liquidation limits for you. If your broker can't do that, of course, talk to someone from my team at EdgeClear. Good luck.